In this video, we want to talk about Philip Morris International. Yes, the cigarette company. And yes, they are still in business because folks still like to smoke despite the health risk. This past week, they reported earnings for the third quarter, with earnings per share growing 50% to $1.97. The company's net revenue grew 8.4% year over year to 9.9 billion, with organic revenue growth of 11%. Now, based on these strong results, the company raised its full year guidance for 2024, and they're now expecting organic revenue growth of around 9.5%, representing 14% growth in the currency neutral adjusted diluted EPS. That was a mouthful, but nevertheless, let's get into the analysis. We're going to start with the monthly chart, and we did have the makings of a breakout. I did put lines around the somewhat asymmetric triangle, and as you can see, we had a candle close back in May, and it was pretty much off to the races. Now, if you look closely, you have this doji candle. So you had a rally in price, basing candle, and then the rally out. That would have been a great entry on a pullback to the round hole psychological number of $100. But after the breakout, momentum was just too much for the pullback. As prices continue to move higher, it did take out all-time highs at that $124 level. It's the reason why price based before we saw for this month that's going to end an extended range green candle. And so this becomes the next monthly buy level. At $120. Now let's take this down to the weekly chart, but before we do that, you have these wicks on the bottom of the candle, signifying that the real buyers are going to be potentially in this wick over wick. So let's just label that now before going down to the weekly chart. And when we look at the weekly chart, we can see this rally, doji candle, which is the basing candle, and then the rally out. So this is what we call a level on level. This is the weekly buyer's level at 115. And typically what happens on a pullback, in this case in an uptrend, the sellers are in control until they are met with buyers. This level is going to absorb some of those sellers. And so if price was to breach this monthly buy level, and if it was to get down to the weekly buy level, there will be a even increase imbalance between buyers and sellers. And so what you would hope is that price would come down and then bounce higher. Now this is a monthly zone, so monthly zones are very, very strong. All right, let's take it down to the daily chart. Before we do that, just want to bring your eyes to another weekly buy level, rally base rally, which sits on top of this $100 monthly buy level. So this was the earnings. We saw a pop in price. Question is price going to fill that gap? No one knows. But at some point, all gaps get filled. You had a nice daily buy level in an uptrend. Which worked out to the T. You have another daily buy level. Which took out the pivot high, came back, and it was off to the races once again. So between 120 and 112, if you want to get into Philip Morris, that would be a great opportunity to go long, as there are many levels of interest from a buyer standpoint. As the charts are suggesting, go long, sub 120. Thanks for watching. Subscribe. Please like the video.